Welcome back to Tax Tuesday. In a slight variation of our regular expat tax videos, in this series of 4 episodes, we're going to be focusing on real estate tax for non-residents. If you have a property or properties where you are collecting rental income, or if you're planning to sell your home in Canada, there are specific tax requirements and obligations. Helping us navigate the murky waters are the international tax professionals at Trowbridge. It gives me great pleasure to welcome Ruby Chouhan. Ruby helps lead the Realty Tax Division at Trowbridge. She specializes in helping non-residents navigate tax issues related to ownership of Canadian property. Ruby, welcome to the Canadian Expat.
Thank you so much for having me, Alan. I'm really looking forward to this conversation today.
So are we. Thank you so much. So just to kind of set up a little bit of a scenario, I am living in Dubai and I'm planning on buying a condo in BC for my future use. But in the meantime, I might as well gain a little bit of rental income. Is there a better province than others for owning rental property in Canada?
This is a really good question because there's so many factors that come into play when considering purchasing an investment property. For example, the economy, the supply and demand, the rental values. However, for purposes of tax, it's really important to note that both Ontario and British Columbia have special foreign buyers taxes. So for example, in Ontario, there is a tax called the non-resident speculation tax. And in British Columbia, it's called the additional property transfer tax for foreign entities. Now, in both provinces, there's various rates, there's various eligibilities, rebates and exemptions. In terms of tax liability and withholding procedures on rental income, the same requirements are across all provinces. So in that regard, it doesn't make a difference.
What are the specific tax implications? You had mentioned kind of, sort of a withholding tax before. Can you explain a little bit about that?
Yeah, this is a really good question because I come across non-residents all the time that have been overseas for about 10 years, 20 years, and unfortunately, they're just not aware of the tax withholding and filing requirements, and eventually it can result in really hefty penalties. So as per the Canada Revenue Agency, CRA, which is the Taxing Authority of Canada, they require that any non-resident rental property owner withhold tax. Now, the default requirement is to withhold 25% of the gross rental income on a monthly basis. Now, you can imagine 25% of your gross rental income is a lot on your cash flow, especially when you have property taxes, mortgage interest, all these different things to pay related to your rental property. The CRA does offer a second option. It's called the NR6 form option. So with the NR6 form, it allows you to estimate your net rental income for the year and remit 25% of your estimated net income. Now, there's special rules related to this. So for example, the form cannot be backdated in the year. So you want to have it submitted as early as possible. Otherwise, you're still required to withhold 25% of the gross rent until such time the NR6 form is submitted. In addition to that, to submit a form NR6 that allows you to pay reduced tax withholdings, you must have a third party, such as Trowbridge Professional Corporation, registered with the CRA's Part 13 and Non-Resident Tax Division. This is a special division that withholds tax for non-residents only. And whoever acts as your Canadian agent, there's a lot of liability placed on them. For example, if you fail to make payments on time or file tax returns, they will be faced with arrears, interest, and penalties. And eventually, it would be your responsibility as a taxpayer to make those payments.
So one of the questions that I had from one of our members is they asked, what are the benefits of the withholding tax? But it doesn't sound like you have a choice. At some point, you will have to pay that withholding tax.
This is correct. So there are benefits compared to one versus the other method. So for example, when you withhold 25% of the gross rent on a monthly basis, it's kind of broken down into 3 parts. The first part is you're doing the withholdings on a monthly basis. Then once the year is over, you would receive a non-resident tax slip. It's called an NR4 slip. It indicates the amount of tax withheld and the gross rental income you earned. Then the third part is the CRA gives you up to 2 years to file your tax return. They give you 2 years when you withhold 25% of the gross rent. With the NR6 form option, because they allowed you to pay reduced tax withholdings, they have a very strict tax deadline of June 30th of the following year. And if you fail to file your tax return, it's called a Section 216 non-resident rental return. If you fail to file that by June 30th, even by 1 day, they will issue an assessment to your Canadian agent, such as Trowbridge, who signs off on your NR6 form, for 25% of the gross rent plus arrears interest. So it's a requirement, it's not an option. And usually what happens is if you fail to withhold tax, when you eventually sell your property, you're required to advise the CRA if you ever earned rental income. And the CRA will look into your file and they'd review your file and see if you withheld 25% of the gross rent or submitted NR6 form. And if not, you may receive a penalty of 25% of the gross rent for all the years that you did not withhold tax. So it's really important to get on side with your rental tax withholding and filing requirements.
So it can be quite painful.
Very painful. And, I come across clients every single day that, the process can be a little convoluted. There's multiple divisions involved. For example, the Part 13 and non-resident tax division, that's where tax withholdings are made. Then the individuals division, that's entirely separate division that's associated with your social insurance number and your tax filings. So it's really important to speak with somebody who can guide you through the process and the steps and the various timelines.
Okay, and I know you'd mentioned a little bit about filing requirements here, but can you go over again, what are those filing requirements that you have?
Yep. So in addition to withholding tax, the filing requirements, well, rather than a requirement, it's an option to file a Section 216 income tax return. So if you withhold 25% to the gross rent, they give you up to 2 years. So for example, if you withheld 25% of the gross rent in 2019, the CRA gives you up to December 31st, 2021 to file your tax return. And like I mentioned earlier, with the NR6 form method, you have until June 30th to file your Section 216 non-resident return. And this is an option because filing this return allows you to be taxed on your net rental income and be refunded any overpayment of tax you may have made. And if you didn't withhold enough tax in the first place, then you may have a little bit of a tax liability when you file your tax return.
Okay. Ruby, thank you so much for joining us. This has been super helpful.
Thank you so much for having me.
We'll see you next week.
See you.
This is an ongoing project. For future videos, please feel free to submit your questions to us and Trowbridge by leaving a comment below. If you've submitted a question that was not answered here, there's probably a reason for that and most likely requires a full consultation. A link to Trowbridge's website is in the description, so please contact them directly. They'd love to assist. Once again, to make sure that you know when we upload a new video, hit the subscribe button and the little bell so that you get notifications. It will benefit the channel and ensure that we're able to continue doing this if you hit the like button. Thanks for watching.